Hi. As we've already learned, the financial statements of partnership consists of the trading account followed by the profit and loss account, then comes the P&L appropriation account, the partner's capital account, and finally the balance sheet. In the previous section, we discussed in detail about the features and format of the profit and loss appropriation account and various concepts associated with it. In this section, we will discuss in detail about the partner's capital accounts in the case of partnership. Now, in partnership firms, there are two types or two methods of maintaining capital accounts. The first one is referred to as the fixed capital method, and the second one is referred to as the fluctuating capital method. The fluctuating capital method is a default method. In other words, in the absence of information or where the question does not specify that any specific method or capital method is being followed, then we have to follow the fluctuating capital method. In this video, we'll have a discussion about the fixed capital method. We'll begin with the features of the fixed capital method. In fixed capital method, two accounts are prepared for every partner. One account is called the partner's capital account and the other account is called the partner's current account. In this method, the capital balance of the partners remain fixed year after year unless additional capital is introduced or capital is withdrawn. This will be discussed in detail when I come to the partner's capital account format under this method. So the first account we said was partner's capital account. So let's go into that account. So as we said earlier, the balance of the partner's capital account remains the same year after year unless additional capital is introduced or withdrawn. Also, the partner's capital account in this method can have only a credit balance. And the reason is, this is because the partner cannot withdraw more than his available balance of capital. I'll discuss these two features in detail when I come to this part of format of account. Let's check out on the items which are credited to the partner's capital account. The opening credit balance of the partner's capital account is brought down on the credit side. Any additional capital introduced by the partner is credited to the partner's capital account. As far as the items debited to the partner's capital account is concerned, any withdrawal out of capital and also the closing credit balance of the partner's capital account will come on this side. Now let's go to the format of the account. So as we said, the opening credit balance comes on the credit side of the account as by balance brought down. Any additional capital introduced by the partner, it comes as by bank. On the other side, for withdrawal of capital, it's to bank account, and the balance, which is the closing credit balance, comes on the debit side of the partner's capital account. Now when I was discussing the features, I said two features. One is the capital balance of the partners will remain the same unless additional capital is introduced or withdrawn. Now it's obvious from looking at this account that the opening balance will be equal to the closing balance in the absence of any additional capital and also withdrawal of capital. The second feature which we were discussing was that the partner's capital account can have only a credit balance. Now, for the partner's capital account to have a debit balance, the balance carried down should come on the credit side of the account. In other words, the debit side should be greater than the total of the credit side. Now if you see here on the debit of the partner's capital account, the withdrawal of capital. When I say withdrawal of capital, the partner can withdraw only to the maximum capital which the partner has. It cannot be greater than the total of the credit side. So either there is no balance, or since the debit side total is less than the credit side total, the balance carried down will come on the debit side of the partner's capital account. Therefore, partner's capital account can have only a credit balance. One more thing I would like to add here is that if you see for the additional capital entry and for the withdrawal of capital entry, the date column is left blank. The date for additional capital, which is by bank account, should be the date on which the capital has been introduced, and the same is for the withdrawal of capital. The date for withdrawal of capital written as to bank will be the date on which the capital has been withdrawn by the partner. So we discussed these two features in detail. The first one, the partner's capital account remains the same unless there is some additional capital introduced or there is withdrawal of capital. And the second one we said was the partner's capital account can have only a credit balance since the partner cannot withdraw more than what his available balance of capital is. Now that we finished the partner's capital account, let's go on to the partner's current account. The features of the partner's current account under the fixed capital method. The first feature says that the partner's current account under this method may have a debit balance or a credit balance. The reason is the second feature. Since the partner's current account is debited with drawings out of profits, and since it is possible for a partner to withdraw more than his or her share of profits, the debit side may be greater than the credit side, and therefore it would lead to a debit balance in the partner's current account. These two features will be discussed in detail when I come to this section on the format of a partner's current account. Now let's check out the items which are credited to the partner's current account. Where there is any opening credit balance of the partner's current account, it is brought down to the credit side of the partner's current account as by balance brought down. Now the following items which have to go to increase the partner's share in the firm: interest on capital, partner's salary, partner's commission, and the partner's share in the profits of the firm. The closing debit balance of partner's current account by balance carried down. That comes on the credit side. Let's check out the items which are debited to this account. The items debited to the partner's current account. Opening debit balance of partner's current account will come as to balance brought down. And drawings amount is debited to the partner's current account. Remember, this drawings is the drawings made by the partner out of profits. Also debited is the interest on drawings and the share of loss of partner in the firm. The closing credit balance of partner's current account will come as to balance carried down. Now let's go to the format of the partner's current account in this method. We'll start with the credit side. We have a balance brought down as on the beginning of the year, which is on 1st April. At the end of the relevant accounting period, the partner's current account is credited with the interest on capital, the partner's salary, the partner's commission, and his or her share in profits. On the other hand, there's a debit balance, then it comes as to balance brought down at the beginning of the accounting period on the debit side of the partner's current account. Also debited is the total drawings of the partner out of profits, the interest on drawings account, and the share in loss, which has to be written as to profit and loss account or to profit and loss appropriation account, depending on whether the loss has been transferred directly from the profit and loss account or from the profit and loss appropriation account. And on the debit side, where there is a closing credit balance, it will end as to balance carried down. Now, the feature which we were discussing is that the partner's current account can have a debit balance or a credit balance. The reason is this drawings, which is drawings out of profit. A partner can withdraw more than his or her share of profit, and where the partner withdraws more than his or her share of profit, such amount which is debited to the partner's current account will be greater than the total of the credit side, and therefore leading to a closing debit balance. The debit side will be greater than the credit side if the partner draws more than his or her share of profit. So the account will end with by balance carried down, which is a closing debit balance. So therefore this partner's current account in the partner's fixed capital method can have a debit balance or a credit balance. So in this video we learnt about the features of the fixed capital method, that two accounts are maintained for every partner, which is the partner's capital account and another one is the partner's current account, and we discussed the format and features of each of these accounts in detail. In the upcoming video we'll do a sum to demonstrate the fixed capital method.